So looking at this place here, for example, you can see that we have what here? Equal high liquidity here. We have this high, and again we have this high. So what can you observe above? We have a form of what? Supply zone. So what happened here? This is the manipulation candle here. Price went sweep this equal high liquidity, okay, and then created multiple break of what structure to the downside, and you can see the market went lower. And you could have entered this at this level with a risky entry, stop loss above, or you go to a lower time frame for your confirmation, and you would have gotten a very good risk reward. Now, will you be able to hold this down? Yeah, it all depends on the kind of trader, but this is your logical target. Yeah, this is a logical target because these are what? Hello traders, today's video we will continue our liquidity inducement theorem video. In this series 3, we are going to look at double top and double bottoms. Okay, most times the retail strategy are simply liquidity, because the truth is the market needs liquidity to move up and also to move down. So to do that, it induces you and I as a trader to be involved in either a buy or a sell strategy in order to take profit out of the market. But what happens is that the market is more complex than that. Okay, in the textbook they taught us that double tops, double bottoms are good ways where you can sell and buy from. For example, you have a move to the upside here, market came down, move up again, creating a double top, and this will be the neckline. When the market takes out the neckline, then you enter here on a confirmation of a short, then stop loss will be above here. This is what we were taught. Stop loss above this double top. Also double bottom, we have a low here, market went up, created another low, break the trend, the neckline. This is the neckline here, market breaking the neckline. On the return of this neckline, you can set to what? Buy, and then the area where you are taking profit is simply the equal distance between here, the neckline, and the eye here. So definitely you are taking your profit somewhere around this area. Now this is what is called what? Double tops and double bottoms. And also in form of liquidity, I call them equal highs, okay, and equal lows. For you to spot this, you need to be looking for equal highs and equal lows. Okay, when you see equal high, equal low, you know that this will induce retail logic traders to be involved in this market. Probably they will enter somewhere here with their stop below, and you need to wait for the market to take the stops. Okay, and how do you do that? As usual, you wait for market, look above the double top for a supply zone, look below double bottom for a demand zone. So when the market, most times this does not play out the way the textbook will say. Okay, most time price will trade low and then takes out this liquidity here. This liquidity inducement will be taken out, okay, before market move to the upside. So in that case, you will be waiting for price to come down here, or if there's any reason for you to take the trade from this top down to this point, you can go ahead and take that trade. But what I want to show is that when price is close to this equal lows, what mostly will happen is price will sweep this liquidity, okay, and then tap into a demand zone, form of another block or whatever it is. Now you can either wait for a confirmation, okay, or you take a risky entry. Whichever way your stop loss, this is the point of invalidation from the trade. Remember, whenever you take a trade, you always have levels of what invalidation. When price goes below this, then you are wrong. Sometimes you might be wrong, okay, but this is a powerful strategy that you should be using in your trade. Okay, make sure you subscribe to the channel, and I will share more of these tips to you. So now let's look at an example. Okay, Okay, so looking at this place here, for example, you can see that we have what here? Equal high liquidity here. We have this high, and again we have this high. So what can you observe above? We have a form of what? Supply zone. So what happened here? This is the manipulation candle here. Price went sweep this equal high liquidity, okay, and then created multiple break of what structure to the downside, and you can see the market went lower, and you could have entered this at this level with a risky entry stop loss above, or you go to a lower time frame for your confirmation, and you will have gotten a very good risk reward. Now, will you be able to hold this down? Yeah, it all depends on the kind of trader, but this is your logical target. Yeah, these are logical target because these are what? Double bottoms. These are double bottoms. Okay, price came, you can see stalled a little bit, okay, before moving again, so you could have re-entered somewhere here. Why was this? Because this was liquidity inducement. When price took it, okay, there was more likelihood for price to come back up here, either trade into this area before moving. But what happened? The market decided to go lower, build a form of redistribution here to push the price to the downside. So all you need to do is to know your area of target. Targeting all of these will have been very beautiful. You don't need to wait and hold all your trade up to this point. Okay, I'm only showing you how you could have entered the trade. And also, if you look at all of this is another form of what? Equal lows here. Equal lows. You can see this low. Price came, clear those equal lows, then move up. You could have taken a scalp entry somewhere there, even in form of just these double candles here. If you go to a lower time frame, this is the 4 hour. If you go to a lower time frame, it will be clearer. Price took it, traded a change in order flow here, the entry, and then you would have taken this trade. Okay, this is also an example here. Equal lows, equal highs. This is a demand zone here. Tap in. Okay, always be patient. Okay, when you are patient, you have quality trades. Okay, quality trades that you can come in and out and you are in profit. Okay, these are double tops example. Okay, this is an example of what? Double bottoms example here. If you look at this as well, these are double tops. When you see double top, just take note of it, mark it out this way, and look above. You can start entering from here. Okay, but price there to go deeper, create another form of double tops here. Market took it, then trade lower. I took this trade earlier in the morning, okay, but I'm currently out of this trade. But I'm hoping for price to also go lower, at least come to this. Okay, it's already there, it's already at these zones, but preferably I would have preferred it to come down here. Probably goes up here and feel a kind of order blocking here to take the price lower. Now also another example here, you can see here double bottoms. Yeah, price took that equal low liquidity. If you go to a lower time frame, this will be a double bottom for you to trade with. Let's see, 15 minutes for you to know I'm not just saying. You can see we have double bottoms. Okay, I think that is all. In this case, yeah, see double bottoms, breaking neckline. Okay, it all depends on what they call neckline, but my idea is sometimes you don't need to wait for the neckline to be taken. Once the equal lows, the double bottoms gets taken, created a shift in order flow. You can see most times when it creates took liquidity, when it grabs liquidity, it creates a change in order flow. And that's what you should be looking for, what ways to enter the market. Okay, let's look at this current trade here. You can see this double bottom clears the neckline here. Okay, clears the neckline. They enter here, and profit is not yet met. Okay, before price went back up again to take out this liquidity. Before price came back up to take liquidity, trade a break of structure here, and this is where you can enter the trade. Okay, and this is beautiful. I think after this record, I should be involved in this sell. Look for a proper way to sell this market from here. I was expecting this high to be taken. Okay, notwithstanding, this is the destination. And so all you need to do is simply mark out your areas, because this liquidity inducement is either it is there, you see, or the market engineers it and trick you to buy and to sell. So most times you have to be patient. Okay, you have to be patient, because being a patient trader will pay off in the long run. There's nothing like you miss a trade. When you miss a trade, always know that there will be another trade. Okay, always know that there will be another trade. Let it play out based on what your strategy is saying, and you will end up becoming a better trader. And that is the reason for this channel. For you to know more on this, you can join my YouTube membership, the Dragon Super Lord. I do weekly workshop from 15 hours GMT time. So you make arrangements to join, and then I'll upload the recordings on only for the Dragon Super Lord to have a review of that. So if you want to learn more on liquidity, I'll see you in this video.